Welcome to Trading Lounge and the US indices for the 1st of February, starting with the S&P 500 here on the weekly chart. As you know, we're looking at wave 4 here, so it's becoming quite clear that we've got that nice correction here. We're looking for it to pull back to the wave 4 of one lesser degree, or the 38.2% retracement level at 4,100. So that's all in place, and I do think there's still another little leg to the downside here before we move up into intermediate wave 5. Let's move into the daily chart. So on the daily chart here, we've got intermediate wave 3, A, B, and C down here for intermediate wave 4, and 1, 2, 3, 4, and 5 here. Now we know that the market has rallied quite high, and in some cases when we look at Apple, there's a good case that we do have a low in place, and if that is the case, then we'll need to look at this low here as wave Y of 4. But I'm not ready to go there just yet. This particular move up through here, if we have a look at the volume on another chart here for a moment, we can see that the volume up over the last 2 days has been positive because it's been closing higher than it's open. But at the same time, this volume bar here was lower than the previous volume bar, and today's move up, which has got a shorter range, but is also on lower volume than the previous bar. So that equals divergence when you're looking at indicators. So it's really moving up on lower volume. So that to me is a corrective move. So we really need to allow this to play out and before we make any decisions about being long. One of the decisions that we were thinking about being long at was working with the closest largest number, and that's the 4,500 at this point. So normally we wouldn't be looking at the 4 here, we would just be looking, the market moves quite quickly between the numbers 5 and 3 in both directions, and also 5 and 8, where it normally takes a bit more of a rough journey between 1, 2 and 3 in both directions. So if we do get a nice tested support with a classic trading levels pattern sitting on the 4,500, well then we'll look to build on the long side. But in the meantime, I think that we still need to look at this as a corrective pattern. We're currently looking at the 4,500, which is a nice supply resistance over here as well. So we're going to view this as a corrective rally until we're proven wrong, and that would be with a classic trading levels pattern sitting on that 4,500. Now the classic trading levels pattern would look like this. If this was the 4,500, we would need the arrival, the reaction, the first high above the level, then a corrective pullback, and then we would look for support over here for that. So we're not there yet, but obviously we're in part of that particular process, so we need to look a little bit closer at that. Now we're looking at this as minute wave 4 down to minute wave 5, but there is another count that I've had originally which I don't want to throw away just yet. It's probably not the case, but I just want to, I can't rule it out because no rules have been broken so far. So from wave B here, we're looking at 1 and 2, and then down for 3, 4, and 5 here. So this is a wave 4 of 1 degree smaller than a minute degree structure. So I think that that's fine. Obviously, this minute wave, this minute wave 2 here is really quite small compared to this wave 4. So it's probably not the case, but I think that I think that we should just keep it here as well, because even when we get this move down through here, what it will do is that we don't want to rush in and buy. We'll build on certain impulse waves to the upside, but we just need to be aware that it could also be a wave 4 when we go down for one more leg. I don't want to get trapped, so having this here will just keep me a little bit more aware of other possibilities. So let's continue to move in here on the hourly chart. So this particular pattern that we were looking at here yesterday, this is in a bit of a nutshell. There's different ways to count this here. In this case, I've got it as an A wave here, an A, B, C, D, and E here for the B wave, and then 5 waves up for wave C of 4. Now, like I said, this can be counted differently and it's no big deal. But whichever way it counts, it still doesn't matter to me because we're looking for an impulse wave up here, which we've got now, so we don't need these. And you know, before going long, we would need that classic trading levels pattern I just talked about. So the arrival, the reaction, the first high above the level, an ABC pattern, then we can move in on the B wave up here. But otherwise, we'll look for short trades once the 4,500 becomes the retested resistance. We know this leg up here over the last 2 days has had diminishing volume, even though it's moving up. So let's see how it deals at 4,500. And the number 5 is the second strongest number in the market. And we know that there's good supply resistance over here at that number. So it's going to have to make a pretty good damn effort to get up there and get supported. So the market's got to prove to us that it is strong by taking out new highs. So I'm really just going to leave it at that for today, but we're going to go in and have a look at this leg here on the tick chart, 100 ticks. This is another way to count this particular structure here. So we know we've pulled every little single wave apart here. So I've just simplified it at this particular point. But we know that it's this particular move here is an ABC pattern. So that is a bit of a key to the bigger picture, because if that was in 5 waves, then we would have we could have a bullish market at that point. But we've only got 3 waves here. Now on the 2-minute, the cash market here, if we go to a 2-minute chart, we looked at this particular position coming back here. So from the low on the cash market, this was the only sort of logical way that I could find that we're in a bullish market. So we can count this here as 5 waves. Then we could look at this as an A wave, a B wave, and a C wave here for wave 2. Then 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and 5th wave. Then the A, the B, and the C here. So it is kind of possible to squeeze and force it in to be an impulse wave off the low based on the cash market. But when I'm looking at this particular chart here, I can only see, and I've pulled every single little wave apart in here, so an A, B, C here. So there's a good case for it being corrective at this stage. I've looked at this as an A and a B and a C wave, and I've called it that here as a B wave here because on the NASDAQ it's dropped lower than this wave structure here. And then obviously we've got a nice 5-wave structure here. So we could look at it as an ABC for a W, and then an X, and then an A and a B and a C wave up here for Y. So a WXY for wave 4, that also works as well. Now from B to C here, I'm counting up as 1 and 2 and 3 and 4 and 5. And as you know, yesterday we pulled all this apart. The other possibility here is that when we get to the top here, it's also possible to count this as an impulse wave here, and then this back as a corrective pattern here. So it's possible to have this as wave 1 and 2 here. And what that would do is that when we come up through to here, I still think there's another little high here. But besides that, if we looked at that as wave 1 and 2 here, and then a 3rd wave here, then we would have a larger 4th wave here, and then a 5th wave here. But it kind of doesn't really matter. We still need this particular pattern here before we can turn bullish in the market. To me, that's a safe trade setup. Now, obviously, we've been long in stocks in this rally, and we're closing those out at this particular point. But this is how it is here. Now, if you're looking for the short trade, you see this move here, which is in 3 waves. So that can be bullish at that point. But if it goes back and tests here and drops again, once you can see 3 waves here, it's a little bit like these 3 waves here. Anything below that, you can look to short at that point. So in this case, we can just copy that and put that there. So that would be the short trade at this particular point. So let's have a look at the NASDAQ. So once again with the NASDAQ here, we've got wave 3 here with an A wave, a B wave. and going down for a C wave here, looking at nice wave 1 here and 2 here. We can look at this as wave 3, 4 and 5. In this case for the NASDAQ, I would only turn bullish if I got a classic trading levels pattern sitting on the 15,000. It's as simple as that. That would be nice and safe at that point. If we have a look at this pattern here, and I'm just going to cut straight through to the 100 ticks, bring in a bit more data, even more. Well, from the low here, we've got the A, the B, and the C wave here for the A wave, and A, B, C here for the B wave. It all fits reasonably nice. Then we can look at this. We can look at that. It doesn't really fit that well there. I grant you that, but not to worry. We're just really, this is the most important part here of the trend. So we can look at it as wave 1 and 2 here, and then 1 and 2, and we were counting all this up yesterday, and we were looking for the top. Oh, we might have even had that in. I can't remember, looking for the 4th wave or something, but 1, 2, 3, 4, and looking for wave 5 here. So we still need wave 4 and 5 to come into play. I haven't pulled that apart here just yet. That's 1, 2, 1, 2, 3, 4, third wave here, 1, 2, 3, 4, 5. So we'll be having, and may want to move. Look, what will happen at the 15,000? It will be the same thing that we're looking for on the S&P, the arrival, the reaction, the first high above the level, and then an ABC pattern over here. And if we're wrong, we need to be long at that point. Otherwise, we can start working lower. In terms of working lower here, we've got 15,000, and above that we'll have group 1. So we can go 100, 200 and 300. That's all of group 1. And if the market finds a tested support on 300, then that's telling you that it's leaving the 15,000 and going up to the next number, which is the 500 here, the 15,500. So getting support, a tested support on 300, severs any market depth pull back to this number here, and it will be pulled to 500 at that point. So the 300, the top of group 1, is critical. When we're talking about the 15,000, the initial swing range is group 1 and group 2 here. So if group 2 here becomes the retested resistance, and the lower end of that is the 15,000, 14,650, if that becomes the resistance, then you know that we're moving down at that point. It's as simple as that. So the 300 for the long side, the 1465 for the downside. Any move that you do in here, be very careful and trade a smaller position size, because this is where a lot of emotion happens. There's people recognizing it as buying opportunities, selling opportunities. All sorts of dangerous things happen within group 2 and group 1 at a large number here. So you want to stay clear of that. Yeah. So anyway, that's where we are. Tomorrow we'll pick it up and we'll be able to work out if we're going to go long or short for the bigger picture. So the Russell, once again with the Russell here, we can look at this as wave A, B and C here, with the market being finished here, and then we can go to the upside. Once again, we want to wait for the S&P and the NASDAQ to finish off what they need to finish off, and then we'll know where we are at this particular point. The other point here too, if we get a classic trading levels pattern on the 2000, which is a major level, we'll also be looking to go long as well. Also within here, the 2000 here, the next degree smaller is the medium level up here, but then the next degree smaller than that are the minor levels here, 1, 2 and 3 as group 1, but that's too far away. So between the 2000 and the 100 here, we'll count the Fibonacci numbers 1, 2, 3, 5 and 8, which reverts to 10, 20 and 30 here, and then 50 and then 80. So we can use those on the intraday basis. So let's just go in here and have a closer look on here. Now, I don't have any answers here. We're just going to have to wait for a session until this unfolds. That said, let's go in and see what we know and what we don't know. So it just depends on, with wave 2 up here, what wave 1 and 2. Now, it just depends on how you want to count this to the downside. I can see that it could be counted in 2 different ways. I can see that we can have wave 4 in here. I can also see that this wave 4 here can be placed over here, and that would be lining up with the rest of the markets if they move down and fall out of bed, so to speak. So we've got, we just need some time here. This little move up off the low here is in 5 waves, so I can look at it as wave 1 and then back for wave 2. Then I can also look at this as 5 waves as the next wave 1 and 2. I could also look at this as wave 1 and 2. So I could look at a series of 1s and 2 here for a bull market. But I would need to see more pattern up here for a trade setup on the long side for that. The other way to look at this, of course, is that I can look at this as an A wave, a B wave, and a C wave here for the A wave here, and then back for the B wave here, and then count up as 1 and 2 here, and go up for 3, 4, and 5. So in that case, I would still need to see more price. I need to see that high up there for that. And if that's the case, then we can look to go long over here. So there's different ways to count all of this here. That's an impulse wave, that's an impulse wave, that's an impulse wave. I could look at this as an A and a B wave here, and then look at this as wave 1 and 2 here, and then wave 3 and 4 here, and then finishing up here at wave 5. So there's lots of different ways to count this. So let's just see what the NASDAQ and the S&P do, and let's just give this some time to vibrate up here for a while. We don't need to make a decision here. We can just chill out and wait. And if we do that, we'll end up doing the right thing at the right time. If we make a move too early, then we could get, we can do damage. So we don't want to do that. We just want to, it's not going to go far. 2000's a big sticky number. It's going to swing around here for a while. So just let it dance. And when it's finished, then we can hit the dance floor. Alrighty. Thanks for tuning in. Cheers.